Hi, this is James Shug at Westpac with the end of day report for Wednesday, June the 11th. Look, it's just going to be a quick report today. The main event in Europe was the Spanish mini budget, the fourth austerity package put in place by the 7-month-old Rajoy administration. They've got an extra year now till 2014 to achieve their 3% of GDP budget deficit, but they're currently on 6.3% and the economy is in recession and expected to remain so into next year. Yet they're increasing VAT, cutting unemployment benefits, cutting pensions. It looks like more of the same harsh measures that actually drive these economies into the ground. We saw it with Greece, and I'm afraid we're seeing it with Spain. I mean, markets liked it. The Spanish stock market up more than 1% today. Spanish bond yields came in quite sharply. They're now down to 6.5% from 7% at the start of the week. But this, I think we'll be back here within weeks or months having to revisit the numbers again, just like we continually had to revisit the Greek situation. This is just unsustainable. The data in the US included the trade deficit, narrowed by about $2 billion in May to $48.7 billion. Imports fell back a bit, exports are up slightly. For the quarter so far, April-May, net exports look like making a bit of a negative contribution or a drag from GDP. The second quarter GDP numbers are coming out on the 27th of July. We've got the FOMC minutes to the June 1920 meeting coming out in an hour or so. The markets seem to be treading water a bit ahead of that, but with a negative bias at the moment. I think that negative bias is an ongoing concern about earnings, with some big sort of firms like Caterpillar, for example, giving downgrading their guidance for the sales outlook and so on, adding to concerns about not just the US but the global economy. So that's the main news for today. In terms of equity markets, the US is currently down around 0.25%. The FTSE in London unchanged. The German market up 0.25%. The French market down 0.6%. Spain's up 1.2%. Don't get that. And the Italian market unchanged today. Commodity markets, well, oil benefited from inventory figures that came out that showed a rundown of oil inventories and also increased refinery use. That put upward pressure on the price, up 2.5%, $86, that's $86 a barrel. Copper's up 1.1% and gold's unchanged at $1,578 an ounce. The Aussie dollar's a bit stronger too, at 1.026 against the US dollar from just under 1.02 about 24 hours ago. In Australia, in Thursday, we've got a few things coming up, including, Deputy Governor Lowe speaking again, and also the employment and unemployment figures, where we're looking for a fall of 25,000 in employment, and the market is looking for an unchanged outcome. Remember, the numbers have been pretty volatile of late. There have been some participation issues pushing those numbers around. Also, unemployment expectations and inflation expectations in Australia. So quite a bit to offer a bit of local guidance to the markets from the Australian statistician and indeed some private sector data providers. Okay, that's it for me. I'll be back tomorrow. No.